I'm Manroop Jhooty with CPP Investments. Today, I'll provide an update on our debt issuance program. But first, I'll briefly explain who we are and what we do. The Canada Pension Plan, the CPP, is Canada's national pension plan, with more than 22 million contributors and beneficiaries. It's supported by legislated contributions from Canadian workers and their employers, along with investment returns. Created by an act of Parliament, CPP Investments is a federal crown corporation that invests the assets of the CPP fund currently not needed to pay benefits. While CPP Investments is wholly owned by the Government of Canada, funds transferred to us are fully segregated from government funds. Our mandate is clear: to maximize long-term returns without undue risk of loss. We issue debt as a financing and portfolio management tool. It allows us to introduce additional diversification to the portfolio while maintaining our targeted level of risk. Our debt issuance program provides investors with access to our AAA-rated credit across major global markets. It offers scale, consistency, and liquidity across 5 core currencies: Canadian dollars, US dollars, Australian dollars, euros, and sterling. Here's how the fund and the program are performing. In the fiscal year ending March 31st, 2026, the fund returned 7.8% after all expenses and grew to more than $793 billion, with a 10-year annualized net return of 8.8%. Our portfolio is globally diversified across asset classes in more than 50 countries, including public and private equities, real assets, government fixed income, and credit. This diversification supports resilience and consistency of returns over time. According to the latest report from Canada's Independent Office of the Chief Actuary, released in December 2025, the CPP is projected to remain financially sustainable for at least the next 75 years at current legislated contribution rates. The report also projects that the fund will continue to grow over the coming years, supported by contributions and long-term investment returns. The fund is projected to reach $1 trillion in assets by around 2030. This long-term strength is reflected in our credit profile and in how we access capital markets. We've had a strong start to this calendar year, issuing 15 billion Canadian dollars equivalent across 4 currencies. We remain on pace to meet our expected funding plan of approximately $20 billion for the year. Recent issuance has been met with strong demand, with order books exceeding prior levels in many cases, reflecting our consistent presence in global markets. While overall markets have experienced periods of volatility, conditions for high-quality, liquid issuers like us have been constructed with solid investor demand. Each year, we commit to issuing at least 2 transactions in US dollars and at least 2 in Australian dollars, along with at least 1 in euros or sterling and Canadian dollar benchmark bonds in 5 and 10-year tenors. We continue to issue in those 5 core currencies, with volumes increasing in line with the growth of the fund. Our approach remains prudent, growing the program responsibly while maintaining flexibility, allowing us to act when market conditions shift. Today, we have more than 1,200 investors globally, with active participation across regions and investor types. As of March 31st, 2026, we have nearly 100 billion Canadian dollars equivalent in bonds outstanding under the program. We're committed to providing investors with regular access to high-quality, liquid credit across currencies. Looking ahead, we'll maintain a disciplined approach to issuance. Thank you to our global investor base for your continued participation and engagement with our debt issuance program. We're strengthening how we engage with our investors, expanding our outreach across regions, and providing more timely, relevant updates. To learn more about our program and latest activities, visit our website and sign up to our investor newsletter. Thank you for watching.